Let's start off with Alcoa posting a fourth quarter loss, a better loss than what we saw last year, but still a loss, and of course missing expectations as well.
Indeed, what we've seen is that expectations for companies in this earnings season is actually quite high, in the sense that what we should be seeing is volumes picking up while costs are still under control. So that should actually make for quite a good earnings season. But Alcoa is normally regarded as quite a good barometer of what's happening in the total economy, because aluminium is such a vital part of industrial production.
Of course, the first company to release results in the US, and we know we've got a lot of other companies set to release numbers. You said expectations are relatively high. Do you think perhaps we'll be seeing a lot of disappointment coming through, especially on the retail front?
Not really. I think that what we're going to start seeing now is that, in fact, we're going to probably see a little bit of a surprise on the upside about activity levels, which would mean that places like retailers, etc., should do slightly better than expected, actually.
China came out with trade numbers yesterday and really pushing commodity prices higher. Alcoa, on the other end, because of these negative results, have pushed commodity prices slightly lower. So a lot of caution being experienced in that sector. Do you think commodities are going to be the key theme for 2010?
Commodities is one of the things that should be driving the economy over the next year, in the sense that what we've seen is a lot of the upswing in the world economy has been concentrated in the emerging markets. You also see from the Chinese figures, a lot of those exports not going back to the United States, actually going to other emerging countries. And those emerging countries are commodity intensive in their growth. They do things like building roads, bridges, etc., etc. Whereas if you see growth in the developed economies, it's normally more IT intensive, whereas in the developing economies, you get commodity intensive growth. And there does seem to be a shift of growth away from the developed world towards the developing world.
Are you concerned about overcapacity in China, and of course industrial overcapacity? We know that China has been stocking up with commodities quite extensively. A lot of concerns about whether it's actually using up these commodities.
I think that there has been a little bit of hoarding of commodities, but the activity levels are very, very strong in China. So we're actually seeing growth around the 10% level going forward. So those commodities should be in very high demand, so not really a concern.
Stock markets off to a good start this year on the local bourse and of course internationally as well. We've got the US markets currently at 15-month highs, South African markets at around 17-month highs. So things looking relatively good. Do you think it's the case of volume still being relatively low? What do you think is going to push markets higher from these levels?
Well, I think in the short term, we've seen quite a lot of liquidity in the markets. We've seen a strong bounce back over the course of the kind of last 3 quarters of last year, if you like. And even at the moment, we're seeing quite a lot of liquidity, a lot of players who may have missed out still coming back into the market. But what we see for the year going forward is that we don't really believe interest rates will be a lot higher over this year. Maybe some quantitative easing being taken away, but not really rates rising. And we do see that earnings should be quite strong, because companies have got overheads very much under control, and as volumes pick up, they should be making very good profits. So rising profits without interest rates rising should make markets quite strong over the next year.
Locally, though, we've got a very strong rand, and perhaps this is pushing to a lot of investors and analysts out there thinking that we could see another interest rate cut in South Africa, just to perhaps push that rand slightly lower. Do you think that there's a possibility that we could see a cut at the next meeting?
I think there's actually a strong possibility, but not at this meeting coming up, because what we're seeing is that the actual measured inflation is still quite high. If we see the actual measured inflation coming down through the first half of this year, which we believe is quite possible, then we think there's quite a bit of scope for interest rate cuts further.
In Australia, though, we're seeing interest rates being risen, and we know that they are planning to rise and hike once again. Do you think that's the right strategy to take, or is Asia a completely different story?
I think Australia is very different from South Africa in the sense that they have been much more aggressive in stimulating their own economy. So interest rates were a lot lower to start off with. They had a lot of fiscal stimulation coming into the economy. So the Australian economy actually growing quite strongly, and also, of course, their exports very much being into Asia. That is a big stimulus for their economy. Our economy, very, very dead still at this moment. We're still seeing credit contracting We're not seeing strong retail sales, so our economy not really calling for a rate hike.
Because in terms of the local bourse, where would you be putting your money right now? Some of the analysts I spoke to yesterday say that they actually locked in profits in December, and perhaps looking at the portfolio and saying, well, perhaps we should see the JSE down 10% before we buy into more stocks.
I think that the key thing is your opinion about what's going to happen to the exchange rate. If the exchange rate stays strong, you should actually be going for things like the property sector and the bank sector, because there's every indication that over this year, coming year, these sectors will do really well as long as the exchange rate stays strong. If we see a significant fall in the exchange rate, of course, mining's back in the picture. So our call on balance is we're going to stick with the strong rand for a while, and therefore we'll be going for the domestic sectors.